if you have equity in your home, like, get on it, use it, get that out of your residential and get it into commercial.
Why would you be saying that? Because I mean, a lot of people are asking me this and saying, yeah, but where the rates are at the moment, the rates are so high. They're paying 5.5 or 5.8% on their property, and then if they're buying a property that's only 6% or 6.5%, that it's very tight.
When you say the rates are high, yeah, okay, they're not really in comparative to the long term to what it has been. That's not to say they're not going higher. Now, I believe that, yes, they will go higher. But often when interest rates go high, yes, you will, in the first uptick, you will have asset prices go down slightly as things start to rebalance a bit. But in amongst all of this, currently at the market conditions in, what are we, November 2022, interest rates are going up, but our problem at the moment is supply and demand when it comes to labour. So you will see creeping into the market, because it's the only way the game has to play now, is wages and salaries will go up. Around the world, there is a labour shortage. And when you have a labour shortage, the way that you get labour at your business over someone else's is a wage increase. How am I going to offer that if interest rates go up? Well, there are things happening in the background right now, and I haven't read them all, but industrial relations are changing, bargaining is changing. So these factors will play into the market. The labour demand, the supply or lack of supply of labour, they are most likely going to push wages up and push them up quite rapidly. And so, yes, we probably will get some pain with interest rates. But if you can afford to, and I'm not telling, someone who can't afford it, but if you can afford to, then why wouldn't you buy and hold now? Because in my mind, right now, we're going back to, the 1980s when interest rates were, everyone was whinging about interest rates being at 7% and asset prices were 60,000. Then fast forward 5 to 10 years and your asset that was at 60,000, residential, for example, is all of a sudden now worth 120 and then gone up. So that short-term pain has given you such a long-term gain in the market, and the equity that you have created by actually doing nothing but sitting on your couch and Netflixing and going to work. There's time in the market and timing in the market. How long you're going to be in the market and when you're buying into the market. I would buy into the market and am trying again right now personally. That's what I believe. I believe we're back at like the 1980s again. Interest rates will go up, wages will go up, asset prices will sit down a little bit before things then resettle. Because remember, originally your wage might have been $20,000 and the house was $60,000. So as your wage goes up and your loan repayments, your loan value goes down, that 60,000 house that you're then paying off at 50,000, but you could now sell back to the market at 120 in the 1990s, that's now worth 400,000 in most cases. Again, individually, it will vary geographically where you are located around Australia.